Everyone's still talking about an AI bubble coming, but the truth is, it already popped, and almost no one noticed. In 2025, AI wasn't just a trend, it was the narrative powering markets, valuations, and stock prices. But narratives don't make money, reality does, and when reality hit, the market didn't deny it, it priced it in. Throughout November, tech and AI-linked stocks didn't just pull back. Many of them fell sharply from their all-time highs as fears about inflated valuations and profitless growth spread. For example, Palantir dropped approximately 25% in a month as investors questioned how its AI investments translate into sustainable earnings. Oracle plunged more than 40% from its September all-time high, largely on concerns about AI revenue delays and debt levels. And Nvidia fell roughly 11% in November, wiping out hundreds of billions in market value after peaking earlier in the year. Most people are waiting for a dot-com style crash like the one in 2000, sudden, dramatic, and headline-making. But bubbles don't always end with a bang. Sometimes they end with a whimper. A slow unwind doesn't make the news, but it is the market adjusting. Part of the reason the bubble went unnoticed is because the AI story worked on paper for a long time. Wall Street loved growth at all costs. Revenue forecasts were dismissed as inconvenience. But once investors wanted real returns, those valuations were exposed. This isn't fear talking, and markets reacted when earnings mattered more than hype. And this is what makes the current sell-off different from a panic. This isn't a crash. It's a valuation reset. When you take companies that ran on narrative and expectations and demand real performance, the ones without it fall first. People aren't scared of AI. They're scared of spending $30 of expectations for every $1 of revenue. That's not math. That's faith. So has the AI boom ended? No, it didn't end. It evolved. The bubble didn't burst in a dramatic crash. It deflated quietly as markets demanded substance over promise. Now, the market is shifting away from stories and toward businesses that actually produce revenue sustainably. Infrastructure, long-term contracts, recurring software. These are the things investors still care about. And that is far more important than any AI narrative. The AI bubble didn't explode. It deflated. That's why most people didn't notice. Because markets don't announce reality, they price it in. Understanding that difference is how you stop chasing narratives and start seeing the real opportunities that still remain.